So let's go for the US100 Nasdaq. Again, get my free training, like, share, comment, and subscribe. I'm going to re-upload this to YouTube, so that's why I say that. So the US100 for the Nasdaq, you can see I called it long here, and again, really strong tech zone. Straight back to that 40 moving average, you're able to gauge that long side market value very well. And what's happened is you've started to push up. That bounce you saw came directly in line with key levels back here. Okay, so that is really interesting because we knew that would be a key PA zone. Now, what has actually happened and what is more relevant in this analysis for the US 100 is this. You can see what's happening quite clearly. This is slowly creeping up in a tiptoe, like a staircase, okay? If you're one of those people that loves patterns and drawing pretty things, you could say it's like a staircase because it's going up, down like this. You can see it's not a sharp push up. That's really interesting and key. It's slow accumulation. Now that is because it's breaking down minor levels of resistance along the way. Within poorer market sentiment, the same sentiment that has dragged the US 100 all the way down. Okay, you may find with Fed news later, employment data, everything like that, that you get a lot of that feeding into the market. You have come to your 40 moving average, fairly near moving average. But if you look at your weekly, what you can see is quite interesting as well. You're about to run, or you more or less hit some really early resistance here. Now, my bias is the same across various indexes on this. I think there is a lot of weakness in the market. I think you may get slightly higher to this point. And that is my area to creep in short. Not massively. I just want to lightly just test the water. I want to see how it is. And it's just your second layer of resistance. Now, if you go to your monthly, you can see it again there, right where I've drawn that arrow. There's a big candle wick. Now that is your area of rejection, and that gives you a really good spot to go off if you're looking to enter those shorts, because once you hit that resistance, okay, you would look for short orders to come into the market. So the current level you've hit here hasn't done much. You can see that by the way the market's reacting. So that's why my bias remains slightly higher. Okay, that comes about on this low, let's say 14,520 or something like that. Now, having said that and staying on the monthly, what you can actually see underneath this low is more key levels. Now, again, my bias is the same across all indexes, especially the FTSE. The bounce is weak. I said to get long. You'll remember that if you watch me. I said to get long. On here, you've got 300 points or so. Okay, it's wise to lock it in and take it because the sentiment in the market is weak, the reaction in the market is weak, and you're not getting that immediate big push-up bounce that you would like. That would probably look something like this, with rejection to the downside. Okay, you've not had that, so you've got the opportunity to infer what that means to you. What does that mean about the behavior of traders at that point? You already know where key price action levels are. You already know where market reaction is. It's then your job to decipher the early stages of what starts to occur, because it gives you that jump forward. It's like starting a race ahead. Okay, so what we can see that exists slightly lower is actually a level of key price action where I would look to scale in long further. Okay, you can see where I've labeled it. You've got, again, key technical areas of your moving averages. You've got key levels with price action. Okay, you can see historic PA. I really like this for long entries, and I wouldn't be shocked if you get there because your reaction at this current level is very light. You're not seeing anything major. And, like I said, if you're going to push up a mid-market sentiment that was strong, you would likely find it moves quite quickly. It's not doing that. Okay, it's not doing that. If you get a magnifying glass, I talk about lower time frames more or less as like a magnifying glass because you're zooming into the near-term reaction. You cannot see how a market is reacting in the near term if you're looking at the higher term time frames. All right, so within this, you've got a very flat uptrend. Okay, it's creeping to the upside. It's not bashing to the upside, it's creeping along. It's sustaining itself and I wouldn't be shocked if you get slightly higher up here. Now, that may come with the news. You've got various US news events. Perhaps that's where you'll get it. I don't know. But the key here is not to guess what the news is going to be. Guess how employment data is. Guess what the Fed is going to do or say, because you just don't know. You might get up here, okay, or you might sink all the way to where we looked at before. You might sink all the way down there. If you don't know, all you can do is simply set the orders. So that long area I was referring to more or less comes where I'm drawing this line, I believe. Yep, that's right, maybe slightly lower. It comes well within some key moving averages on the monthly. I would expect your stock oscillator to drip slightly. So this is really, really good long zone. You can see your 200 MA as well on your weekly is coinciding too. So you've got some really good long side market value there, in my opinion, and wouldn't be shocked, like I said, if that holds a very large amount of weight for the long side. But given this early weak price reaction, this early price just saying, and slumping over and saying, you know what, it's not doing much, if you do get to that point, it wouldn't shock me. So again, we're letting the news come out and then we're reacting to the news. We're not guessing it beforehand and entering now because we know we don't, we know that we're not sure exactly what the news is going to do to the market. Your job really with news is simply to use the volatility as a machine, as a vehicle to make money. Okay? Because the only thing that's going to allow you to make money is the market movement. There's no point in being scared of it, because if you're scared of market movement, um, you're never going to take a trade, are you? You're never going to make money because you've got to learn to live with it and work with it. Now, the way to do that is just have set risk plans. And if you're coming and watching me every time you're saying, you know what, oh, I know the risk plans, I'm going to do it on my own, the likelihood is you don't. It's going to be extremely costly if you try to do it yourself. Okay? If you've got any questions regarding that, just put them in the chat box. I can answer practically anything. I'll probably do an FX chart now. I was looking short on the CAC and other indexes, but we haven't quite got there yet. But that is my plans for Nasdaq. That's how I'm trading it. If that helps, don't forget to get my free training underneath.